Well, the sale of Credit Suisse has brought a certain type of bond to light, additional Tier 1 bonds. Let's talk a little bit about what they are and why they are getting so much attention. First of all, let's talk about what typically happens in a bankruptcy. To be clear, Credit Suisse is not a bankruptcy, but it is clearly a rescue. And according to the SEC and, most econ textbooks and finance textbooks, first the secured creditors, those who have collateral against their lending, they are the ones who are made whole first in the event of a bankruptcy, then unsecured creditors, and then stockholders. Those folks in the middle here, they're not all getting made whole in this UBS rescue of Credit Suisse. And that's because of these additional Tier 1 bonds. Effectively, what they are, they're a type of debt, a special type of debt that was cooked up after the European debt crisis to help increase capital at some of the European banks. It helps them bolster their capital to meet regulations that are designed to prevent failure. However, if there is a failure, if there is what's called a distressed event, sometimes they can be converted into equity, that is, into stock, or entirely written down. It is the latter that has now happened in the case of UBS's acquisition of Credit Suisse. As a condition of its acquisition, it did not want to have to take on those liabilities, those bonds, because it wouldn't have made financial sense in the eyes of UBS. But what this means is now more than $17 billion of these so-called AT1 bonds are being wiped out. The folks who hold them, mostly centered in Europe, now will not get anything back on that investment. And that is being seen by some as quite controversial, even though this type of investment is seen as quite risky when you buy the stuff in the first place. And while some of those AT1 bonds are so-called COCOs, which is a whole nother diversion, they can be convertible into shares, the Credit Suisse stuff was not. If you looked at the fine print, which we talked about with our guest from Columbia earlier, it said that you were potentially going to lose your money.